Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Tuesday, May 16th. Today we are going to take a look at Papa John's. I'm sure you may be aware of who they are, right? They're a pizza company, do deliveries. Let's jump right in the video. So www.papajohns.com. If you want to order a pizza or learn a little more about them, this is where you would go. I pulled this information from their website. That is their homepage. About us, building a foundation of quality. The secret to success is much like the secret to making a better pizza. The more you put into it, the more you get out of it. Our pizza family is hungry for perfection today as we were when we first opened our doors more than 30 years ago, and when we're driven to be the best at making making innovation, new products and recipes. So you can read through the rest of this, right? They are in 45 countries, 5,000 locations. Started in a broom closet in Jefferson, Indiana, right? Don't use cheap and more processed ingredients. So go ahead and read through the rest of that. But again, you're probably pretty aware of who these guys are, right? Pizza is primarily what they sell. Papa Bowls, Papa Bites, Papadillas, wings, sides, extras, drinks, desserts, that sort of thing, right? They're your similar company to Pizza Hut or Domino's, that sort of thing. You may even eat some of their pizza on a regular basis. I know that we don't necessarily go to Papa John's, but we do get pizza and wings from time to time. So let's jump over and see why we're taking a look at them today. So we are talking about Papa John's International Inc., ticker PZZA. This is out of I believe this is out of the consumer discretionary. It may be consumer staples. Check me down in the comments if someone is familiar with if this is a consumer discretionary or a consumer staple stock. It's one of the two. Let me know in the comments down below. But they were down 5.9%, almost 6% down on the day. Big drop on the day. Always going to check out a company that's paying dividends like this and whenever they have a big drop like that. And this is one we have not covered before, so I was interested to take a look at the metrics anyway. Closed out the day at $72.07. 52-week range as low as $66.74, as high as $97.78. So definitely heading closer to that 52-week low than it is the 52-week high. Average volume 641,000. Today's was 1.16 million. You can see that sell off right throughout the day. Market cap of 2.354 billion, so a small cap here. Beta of 1.08, so they are more volatile than the overall market, just slightly. Price to earnings PE ratio, this is high, right? 32.03, $32.03 per share. That is really high actually for a pizza chain. I don't know that they're growing fast enough to justify this high of a price to earnings ratio, but that's what it is. Earnings per share, EPS is $2.25 per share. That's decent. Next earnings date is August 2nd through August 7th. It's going to fall somewhere in there. Forward dividend is $1.68 paid out on the year. I believe they are a quarterly payer. We'll see that here in a minute. Dividend yield, pretty decent dividend yield, 2.19%. Ex-dividend date of May 12th, so we just blew past that one. If you were to buy them now, you would not be in line for their next dividend. And according to Yahoo Finance, where I pulled this information, they have a $94.27 estimate in the stock price. So it speaks to some potential upside appreciation in this one, close to their 52-week high actually. Now, as I've said on previous videos, if you watch, you want to get in here and look a little deeper. I like to go into statistics and the financials. In statistics, I like to go down to here and look at dividend yield theory. So go down to dividend splits. You'll find their 5-year dividend average. That's what it is right here. 1.48 is their 5-year dividend average. You want to compare that to their forward annual dividend yield or the current. I mean, they're the same, 2.19, 2.19. And if this number, the forward annual dividend yield or the current dividend yield, is higher than the 5-year average, it speaks to some potential undervaluation. So this one is potentially undervalued, at least according to dividend yield theory. And they have a payout ratio around 71.56%. You can see their last ex-dividend date was May 12th, and their dividend date, their payout should be around May 26th, right? Another one, again, going to their financials, you want to look at assets over liabilities. You want to look for growing revenue. You want to make sure that their debt is decreasing, not increasing, that they have enough free cash flow to cover the dividend. And that is what we're looking at on this one. Free cash flow. Under this tab, though, you would find their income statement, their balance sheet, and another tab that says free cash flow. So that's what I'm looking at. As they pay their dividends out of free cash flow, you want to make sure that's growing over time so that they can continue to cover the dividend, right? So down here at the bottom, free cash flow, you're looking 2019, 24,000. 2020, 150, 2021, 116. These are million, right? You add 3 zeros in Yahoo Finance to these. This is really 24 million, 150 million. So growing there, but then from 2020 to 2021 dropped down to 116 million, and then from 2021 down to 2022 it dropped down again to 39 million. So overall, we've had a drop off the last several years from 2020 to 2022. So decreasing free cash flow, that is not a good sign. Repurchasing stock does look like they are repurchasing stock. That's a little extra, right? You want to make sure that a company is not diluting you as a shareholder, which means they are issuing more stocks. You'd prefer that they were buying back shares like this company is, or they were leaving it as is. So far, not liking the free cash flow. That is not a good sign. This is all brought to you by Yahoo Finance. I'm not affiliated, just one of the sites I like to go to, and I always recommend more than one site. So another one that I like is stockanalysis.com. Again, not affiliated, just another site that I like. They give you a lot of the same information, financial statistics, this forecast that we're looking at here. And they have 11 stock analysts that have taken a look at this. They actually called a consensus buy. I actually don't know that I agree with this. Whenever I take a look at all the metrics, that growing free cash flow over time is a big one that is a no-no for me anyway. I put a little bit more weight on that than the average person might, though. But anyway, back to the 11 stock analysts that taking a look at this. They call it a potential low of $86 per share. So it's currently sitting lower than their lowest estimate. So it comes back up to that $86. That would be a 19.33% increase in the stock price. If it hit their high or their average of $96.82, which is pretty close to in line with what we saw in Yahoo Finance, that would be a 34.34% increase in the stock price. And they have a high estimate of $115. And if it hit that, that would be a 59.57% increase in the stock price. All the while, you could collect that little over 2% dividend yield. So another one that I like to look at here under statistics, ROE, return on equity, and ROIC, return on invested capital. I'm looking for 10% or better on both of these. And as you can see here, the return on equity in the negative. That is a big red flag to me. Negative 24.40%. Something's going on here with this one. Return on invested capital is above 10%, 10.10%, but the ROE is not. So that's a mixed bag there. I would say that's another check against them. So free cash flow is not growing over time, which is a big no-no for me. I actually did look at their assets over liabilities. They do not have enough assets to cover their liabilities currently. I know that's not a metric that I typically do, but I did look at that as I was pulling this together. So there's a few red flags on this one that come to my mind. Now, if I had a position in Papa John's, this is where I would show you. I do not. It's not a company that I own. We'll look at the rest of the information. They have a payout ratio of 70.90. That's getting to the high end. I like 75% or lower. They do have high dividend growth, 20.0%. Now, with a 70% payout ratio and decreasing free cash flow, I don't know how long they're going to continue to grow at 20%. I would assume they're not going to be, but as you can see, back May 13th, 2022, they were at 35 cents per share. They have been at 42 cents per share as of August 12th, 2022. And if they were going to continue this dividend streak, at some point here in the near future, they should be paying this out. They are a quarterly payer. You can see that they pay out on the, February, May, August, November timeframe. Well, that is Papa John's. It is not one that I am necessarily looking to get into at all, really. It's one that because of the free cash flow decreasing over the last 3 years, I have some concerns there. It would not be one that I would be interested in. It's just not a company that I'm looking to jump into, and the payout is on the higher side. So I'm looking right now, anyway, for some lower yield or some lower payout ratios. Not necessarily lower yield, but lower payout ratios. I do like the dividend growth. That is a plus. A lot of the other metrics, dividend yield theory says it's potentially undervalued. So mixed bag here. You take that with a grain of salt and do what you want with this one. But for me, I am staying away from it. Let me know. Oh, sorry. My investing criteria. If you want to stop, pause this, you can look through. This is what I look for in businesses. The first 6 of 7 are for regular companies. The 7th. Or the 8th, the first 7 are for regular businesses, and the 8th I throw in for financial companies. And the price to book, right? You can use that for any company. That's just one that I like to look at for financial companies. So you can read through this. You should be coming up with your own investing criteria. Don't just blindly copy mine or anyone else's. We all have different time horizons. We all have different goals. Make sure you are aligning yours with your goals. Well, that is it for this one. Let me know what you think of Papa John's. Is it in your portfolio? Is it one you're watching? Are there other companies similar? I think Domino's is one that a lot of people like. Let me know what you think about it down in the comment section below. Again, it's one that I'm not really looking to get into. It's one that I would probably avoid right now because the growing free cash flow is on the decline, or it doesn't have growing free cash flow. It's on the decline, and the return on equity is way in the negative. That's a big red flag for me anyway. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Join the vested interest community, looking to build a like-minded community of dividend growth investors so we can share our experiences, share stocks that we are watching in our portfolios, stocks that we are avoiding like the plague or trying to get out of. Drop all that information down below. Let me know what you think of this one here. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company or stock you want me to cover in the Stock Pick of the Day series, go ahead and drop that down below in the comment section, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and abundance. Should never invest in mind uncomfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel a certified financial advisor.